Oh, gosh, you can hear one of my hens in the background. Sorry about that. I've considered a sound effect. Yeah, the down home on the farm with charts. So, wow, what the past 24 hours and what a past 5 days, too. This market is just bananas. The euro continues to drive everything at this point. We had chicken, shut up. Okay, my apologies, but you'll get used to it. So yeah, the euro, we had this nice, fun collapse after the, so here's the salvation. Whoosh! Here's the hangover. And here is the referendum, no referendum. He's going to resign. No, he's not going to resign. Da, 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 da. So just madness. The closer we get to this line, the more comfortable I am shorting. I still have long positions, and thank goodness for that. I mean, sometimes I'll say, oh, I really resent having these long positions. Actually, no, not so much. They've been saving my bacon lately, so thank you, long positions. Some have been doing just really nicely. One short that did great today is Abercrombie and Fitch, but I'm out of that now. So even in a market like this, well-chosen positions can do wonders. My God, this has got to be the weirdest market commentary in human history. Rename my blog, Who Gives a Cluck? So this is the ES. It's kind of disappointing because last night, I mean, if you had looked at midnight last night, you would have assumed that today would have been a cataclysm, and instead it was like a bull orgy. I guess the demolition of the referendum caused a lot of relief. But I say again, that the market, I think, has tipped its hand. And the closer the euro gets to that line I showed earlier, the better. One thing I'm going to say real quick before I just rip through some indexes real quick is I don't understand the public's fascination with these IPOs. I mean, let's look at the big internet IPOs that have come out. There's, just off the top of my head, there's Pandora, symbol P. And so we have the big IPO and bleh, kind of doing nothing. Then there, of course, is Zillow. So we have letter Z for this one. Big IPO, bleh, down here. And then LinkedIn, run by the corpulent Reid Hoffman. Big IPO, bleh, and then a recovery, and then bleh. And as of now, they just came out with earnings. It's not getting zapped too bad, actually, considering it's down a little over 5%. I mean, for a stock like Apple, that would be like, page one of the New York Times. For something this volatile and this IPO-ish, that's really mild. So they must be relatively pleased. Because, I mean, the PE on this thing is like over 1,000. I think 1,200 was the latest PE I saw. So this is actually kind of amazingly good performance. But the point I'm making is that Group and GRPN comes out tomorrow. And if history's any guide, it'll open at its high and fall the rest of the day. So I don't get it. But I'm the sort who really wants, at least 5 years of daily data before I trade anything. So I don't really care either. It had crossed my mind to maybe short LinkedIn just because it's got a 1,200 PE, but that's not the basis for my trading, so I didn't bother. Now, as I said, I just wanted to kind of tear through some indexes. These are simply the ones that are in my watch lists. They will be in alphabetical order, and some I'll comment on, some I'll just blow right by. So, NASDAQ Composite. Big recovery today. The worry zone here is at this high, 2753.37. I'd really like to see us ease away from there. I had hoped, and I'll show this when I get to the ES, that we'd have a very clean setup for a shorting. Didn't happen. Today's strength was just too much. Dollar CRX, this is the commodity index. I shorted DBC today, and because I think commodities are pretty shortable, but you see the line there. We'll see. Boring. China index, going to blow right past that one. DJUSEN, this is the oil and gas index. Kind of hard to say here because, yes, we've got some lower highs here, but if this strength keeps up and we push past the high from last week, this gets, it's still kind of broken, but it's a little more worrisome. I had hoped and those hopes were ill-founded, that the low from the 31st would kind of be our line in the sand. Today wrecked that. Today's strength was really surprising and a little damaging to some of the bearish stuff. Here's HUI. I'm just going to get rid of this right here because actually let's just move it. Let's take a look at where the gap is on HUI. Let's zoom in and move this sucker way up to this gap. So that's our next line in the sand. We're going to move this line to the low of the 21st of September. And so a little more room to play here. 611.07 on this. Could be an interesting short at those levels. I had shorted GDX today to no good effect, and I am not in that anymore. Okay, the Dow Jones Industrial Average. We had, I don't know why these charts are loading so god-awful slowly. This is just terrible. My apologies. Let's pause this. Okay. Over 200 points today. And in a bit of a no man's land again. It was fun while it lasted that it was bouncing between these fib lines. Right now it's in the middle of the range. Again, I must say I was hoping that the high from the 24th would constitute sort of a shoulder, head, shoulder kind of thing. Didn't happen. Today's strength, which was a very odd strength because this whole referendum craziness zapped that idea. Mid caps line here is 921.66. It's all about the jobs report. If we get something, I'll just make this up. Let's say that 300,000 people were hired and everybody goes crazy in the markets at 300 points, really sticks a knife into a lot of the short-term bearish arguments. We really need a weak Friday to for some of these charts to gel, honestly. If we get a blowout jobs report and the market zooms, it's going to put more damage into the bearish case short-term. NDX, the high on this one I'd say is 2412.52. If we get past that, we just have to watch that upper line for our next area. So there's no doubt we're kind of in the upper ranges of recent price activity, but I say again, we got to get weak fast. We're getting dangerously close. Russell's very clean here. Let's zoom in on this one. This level, 769.46, we don't want to violate that because what is already a little bit messy charts become quite messy at that point. If we got above that, we're back into this zone, the 770 to 820 area. So no thanks. Please don't do that. We'll see. SML is just too similar. I'm going to trip right past that one. And you would think I'm on a 300 baud modem or something. I don't know what in God's name is going on with these charts. These are just way too slow. And these are only 2-year charts too. I usually use 10-year. Dollar SPX. This is a bit of a messy chart because this line would have been really clean delineation. This is just a big fat mess at this point. I'm almost tempted. You know what? I'm going to get rid of it altogether because it means nothing at this point. It's been crossed way too many times, so it's gone. But in this instance, obviously, the recent high here on 1292.66. Don't want to get above that. If we do, I think that lays the groundwork for getting up to about 1330, maybe even 1340, something like that. It all depends on the jobs report. I said that already, didn't I? Transports, same shtick, similar line. Utils, I've kind of don't make sense to me anymore. I don't really follow them. I don't trade them, and I am kind of flabbergasted that they've been behaving as incredibly well as they have. But there you go. Let me just wrap this up here because I'm going to make this fairly short today. I just wanted to show you the ES as I'd mentioned earlier. God, first chickens. Now we've got like ravens or something. It's like a nature show here. Let's do this to a 30-day half-hour bar graph. This is the ES again. And the fervent hope that I had, which I'd done a post on earlier today, was that we'd get a nice formation here. So we got here, and then this, and then this. And so had I been looking at this at 12 in the morning, this morning, it would have been awfully exciting because what would have made for a really nice trade would have been violating this level, 1208.50, and heading down to about 1125. Did not happen. This entire pattern here is pretty much moot at this point. I'm a bit of a purist about these head and shoulders patterns, and this guy is way higher than this guy, so this is really more of a trading range at best at this point, not a pattern at all. So anyway, and we'll take one last look at the euro to see what it's doing. I'm recording this about 45 minutes after the Thursday's regular close. Yeah, it has been less strong than equities, certainly. I don't even know the latest about what's going on in Europe, but I gathered that the whole referendum thing just blew up in GPAP's face and he's going to resign. Something like that. Who cares? Ugh. All right. Well, we'll have lots more to discuss after the jobs report, see what effect that has. And I'm 20% long, 80% short at this point. Kind of hoping for a tumble, as always, but have my longs, all of which are profitable at this point, I think, kind of shoring things up, cutting risk down, which we like. That's it from me. Good night, everybody.